Morning, Carl. Dave Calhoun, CEO of Boeing. He mentioned the guidance. I think that's one reason the stock is up. You reaffirm your free cash flow guidance, both for this year and longer term. But I think a lot of people want to ask about the 737 MAX right off the bat. You're bringing down your delivery estimates again. What happened in the third quarter that you've said we can't deliver as many as we expected?
Yeah, well, Phil, it's great to be with you this morning. We do feel good about where we finished the quarter. We alerted the market to a couple of non-conformances. One of our suppliers, pretty much everybody knows what it is. I think there was some speculation as to how long it would take us to get our arms around it. The good news is we have our arms around it. We know the work that has to get done. We've put it into the scope of our factories. And I think it'll be a little better than probably many had surmised. And we'll get back to our full rate by the time we get to the end of the year. October gets hit a little bit by the time we get to the year, though. We're going to be running at the rates people expect us to run.
Let's talk about the elephant in the room. I know you don't want to talk about another publicly traded company, but it's Spirit AeroSystems. You guys made a deal with them, pumping $100 million immediately into them for help with the retooling on the 737 MAX. You're going to be working more closely together with them. But I have to tell you, when I bring up Spirit AeroSystems to people, the same thing I hear over and over is these are the guys who can't shoot straight. They can't deliver the fuselages. It's been one problem after another. What gives you confidence that you're working more closely together with their new CEO, Pat Shanahan, and his team, that things will change and they will get their act together? Yeah, well,
start by necessity. We are working very closely. We probably have well over 100 people in the factories supporting their teams. But I will be the first to say I love the appointment of Pat. Pat is an operator's operator. Pat knows exactly how this fuselage moves into the Boeing factories. He knows exactly what we see. So far, the reports from my team are he's on the floor literally every day. And that's a great sign for all of us. So he'll incorporate everything that he knows we need. A lot of confidence. Now, they have work to do. We get it. But I have a lot of confidence. And then structurally, the agreement that we moved on just gives them breathing room. They needed breathing room. We understand it. The economics were a win-win for us in many respects. It definitely moves a little bit of cash their way in the early years, but it gives them the kind of breathing room they need to meet our rate requirements as we begin to move up this growth curve.
Jim, I know you've got a question for Dave.
Thank you, Phil. Dave, great to see you as always. Three things that I think are really good. One is that your defense business, it's time to talk about it because it's obviously indispensable. Second is 787. The orders are there. And then the third is, I guess you're almost out of 737s, and therefore the leverage will begin when you can start building them again to suit.
Yeah, Jim, thank you. It's, of course, great to be with you. And by the way, I'm quite sorry about our Phillies. But with respect to those...
You had to go there. Okay. You talk about the elephant in the room. That's like, that's like Thumper. It's like, I don't know. It's Bambi right at this point.
Yep. So let me just comment on a couple of those things. You're right about the defense business and the military. We are going to continue to work our way through these fixed price contracts. We're not hiding from them. We'll complete them. That will reduce the sort of the financial weakness of the business. But on the flip side, on the demand side, in light of what's going on in the world, in light of the supply chain rebuild that has to occur, these stores have to get replaced and they have to grow. The forecast for our weapons business, it's a $3 billion business. Might not sound like a lot, but that forecast is getting more and more robust every day. And if we can get some help from the Congress and move some bills through, we will ultimately, I realize, those gains. So yes, BDS is looking better. I do think the defense world in general has to commit to the rebuild, and I think we'll get support through Congress. And if I could on the MAX,
sure, absolutely.
If I could on the MAX, you're right to point it out. So our finished goods, as in the MAXes that were on the tarmac when we finally certified at the end of 2020, we are steadily working our way through that inventory. We will be complete, if not totally complete, close to totally complete by the end of next year. The cost that will take out of our business and then the reapplication of that skilled labor to the rate increases inside our factory, it's just an enormous step change for us, and it's one we're looking forward to. We make very steady progress against that one. It's a big deal. And yes, customers can't get enough for the 787.
All right, so there's a kind of spoof article, I would say, in September in the Wall Street Journal about where you work. I was part of the spoof, so to speak. If you're working away from home and you deliver these numbers, I actually don't care where you're from, but you're at headquarters. How are you feeling about working from home versus working there?
Yeah, I want to make it very clear. I don't work from home. I work in our factories, and I worked at our sites all around the world and throughout this country. That's what I do. And the signal that we sent in 2020 when we got started and I got started was everybody get out of headquarters and go to our factories, go visit our teams, listen to the ground troops. And that's really the message in all of that. So, yes, we travel a lot. The Boeing CEO likes to fly. It's about that simple.
Dave, one of the questions that keeps coming up, whether it's today, whether it's yesterday with GE, Raytheon, it's very clear. The supply chain remains an issue. Is it time for us as investors, the investor community, to dial back expectation from manufacturers as we look out over the next couple of years? Because it's clear, when you talk with Larry Culp at GE, look, they're not getting the level of production increase from their suppliers that they would like. And they're working with their suppliers, as are you. But is it time for investors to say, I know they say they're going to deliver X amount in 24 and 25. Do I have confidence in that?
Yeah, so I talk to Larry probably more frequently than pretty much any CEO in the aerospace world. Why? Because we are dependent on him. And what I do is I understand his rates, and then I make sure I don't build rates that are higher than his. So he's a constraint, and he's got constraints, but we are pretty well tailored. When I look at our forecast and the rate increases we have in mind, and I've said this many times, it is a supply-constrained set of rate increases. If it were just demand, these rates would go up double, and they'd probably go up tomorrow. So, yeah, we are constrained, but I think there's transparency between all the major players. I think for the most part, and I can tell you at the airplane level, we will not increase our rates at anything greater than what that supply constraint tells us. And that's really the world we live in right now.